Mr. Talwar, if I could start with you first. Tell us about the overall scenario in the real estate space, because there's tremendous stress in the NBFC space as a few troubled realty players are unable to pay lenders on time. Is that really the reality with each and every realty developer?
My view is that this is all coming now to a boil after years of neglect. I think from, let's say, UPA 2 till now, and the Reserve Bank, they have not been giving a fair treatment to either housing, construction or the real estate sector. Banks have been having an additional weightage on it, an additional risk weightage. They've been giving on a high rate, and NBFCs are even higher. So therefore, any sector which is down since it was in the last 10 years and then is burdened with an extra heavy financial burden, you will find problems cropping up in that. Many a good company has gone under, many are defaulting, and I think the next bubble that we are waiting to see is the impact on the NBFC sector, because either they've lent at very high cost to construction and real estate companies, or even if they've lent to the individual borrower, which everyone considered was the safest, eventually that money reached the builder. So unless and until builders themselves were extremely cautious, like we were in DLF, many others would have a problem. I mean, the idea was that yes, not only undertake limited number of projects, but see to it that you complete them, hand them over to the customers, and thereby meet customer liabilities on an immediate basis, which immediate basis was itself spread over 4 to 5 years. I think the idea should have been to create a surplus, to keep moderate prices, to deliver to customers, which is the first responsibility. But unfortunately, policymakers and the RBI and the commercial banks have not seen it that way for the last almost 7 to 8 years, and hence we are now going to face problems increasingly.
Right. Mr. Talwar, what has led to the concerns in this space, especially for a Delhi-based player like Supertech? You know, the company has been unable to repay loans on time. There are concerns that further payments may be strained for smaller real estate companies.
Companies which have been saddled with very high cost loans, and the cost of money in this sector is a very major player, like the cost of land. If the cost of land is constantly being decided to go up and up and up by various state authorities, because they are themselves accountable to transparency and fair market practices like auctions, if the cost of land goes up, then the cost of construction rising and the cost of servicing debt also going up, it would be a killer for many a small company.
Mr. Talwar, tell us about the on-ground reality in terms of demand trends in the NCR region. The muted demand or weak cash flow is playing havoc in companies being able to service the interest on their loans.
See, I think, sorry to contradict you, but I think you're looking at it at the wrong end. That muted demand is leading to inventory pile-up, and that is something which is leading to defaults. I think all of us, you and I and the nation at large, are so used to creating shortages in real estate and housing, because we expect a very high return. Anyone who doesn't get a double-digit growth return says, oh, my money is gone waste. I think that is not the truth. Mortgages for homes should be at lower rates. Prices should remain moderate and not constantly keep on rising. And if the overall economy is not growing speedily, then to meet the cost of high value money would be extremely difficult for any sector.
Right. Mr. Talwar, realty players are generally saddled with high debt. Given rising interest rates, will they be able to hold on to high inventory levels for long? And would then one see pricing cuts?
I am very happy that you're asking this question. If your analysis is that there is an inventory pile-up, look at what the government is doing. In the last 7 to 8 years, We had one government in the past which said that if you sell a house, you can only buy one house in return. Obviously, it should have been the other way around, that you could buy as many houses as you would feel like, as long as the entire sum of money which was generated by a sale of an old home is consumed. What has the government done now for the last 2 times? Number one, on the inventory, they're even thinking of placing a notional income tax. I mean, a tax on notional income, if the inventory is still lying there. Are you trying to make companies which, 2 ways, one, which have created a surplus, are you saying that you're being penalized for a good performance? Or others who are still facing problems, and if they have any inventory left, you're saying that, sorry, make a distress sale. So therefore, I think these policy issues need to be highlighted by your channel, by your speakers, and by the others in the discussion, so that the government does take corrective steps immediately.
Another problem is incremental drying up of funds for realty for new projects from NBFCs, high interest rates, and lenders themselves having a tough time funding new projects.
I think we are coming back to a classical cycle where, yes, high cost of funds leads the smaller ones, or maybe some bigger ones also, like you've seen in the court cases which are going on, into problems. There's less construction, and eventually a shortage is always created, so that, yes, prices rise. Everyone seems to be happy with that. The return to the builder is greater, the cost to the customer is higher, yet the banks get their money back, and therefore we again go back to speculative prices and increase in prices which are hand over fist, and which of course increase over a short period of time. I think that is something which we need to avoid. It's a very serious matter for the RBI to think it over, for commercial banks to think it over, and for government to promote policies that lead to a much larger absorption and not tax more and more, whether it is indirect taxes or even direct taxes now. I think that there is a very strong case made out that if the investment cycle has to pick up, if the delivery cycle and the absorption rate has to pick up, as an economy, as a country of 1.3 billion people, I think we need to have a much more serious look at the housing, real estate and construction sector.